Hello everyone, welcome to Top Finance. Imagine having access to the capital required to bring every one of your business ideas to life. Picture the ability to invest in each of your dream projects without the constraints of personal finances. Today, we're going to unveil the strategies used by one of the world's most successful individuals to construct a vast empire, starting with absolutely nothing. The mindset of "I can't afford it" or "I don't have money" often leads to a self-fulfilling prophecy of financial limitation. This perspective can be a significant barrier to prosperity. In contrast, adopting a mindset of "how can I afford it" opens up a world of possibilities and becomes a driving force for creative problem-solving and innovation. This shift in thinking is crucial for entrepreneurs and investors who must master the art of raising capital to succeed. Robert Kiyosaki's initial foray into investment exemplifies the strategic use of leverage to achieve an infinite return. His first investment was structured to be entirely financed through debt, meaning that he did not utilize any of his own capital in the transaction. This approach is predicated on the idea that any revenue generated from the investment, after servicing the debt, constitutes pure profit. In 1973, Kiyosaki embarked on his inaugural investment deal, which involved purchasing a condo valued at $18,000. To secure this property, a down payment of 10% was required. Rather than paying this sum out of pocket, Kiyosaki ingeniously arranged to cover this initial cost through additional borrowing. This method of financing ensured that his personal financial contribution remained at zero, setting the stage for an infinite return on investment, as all profits beyond the debt repayment would accrue without any direct personal financial input. Take Robert as an example. He initiated many projects without initial capital. This constraint didn't hinder him. Instead, it fueled his creativity, compelled him to think outside the box, and motivated him to educate himself on finding viable solutions. Embracing this philosophy means that a lack of money is never an obstacle. It's merely a challenge to overcome. Each time you're faced with a financial hurdle, it's an opportunity to develop and refine your ability to generate the needed funds. This open mindset can transform your entire approach to life and business. It's not just about having the resources, but about being resourceful. With this approach, you're more likely to see opportunities where others see obstacles, and that can indeed change your life. How did Robert attain such extraordinary success? The strategy of utilizing other people's money, often abbreviated as OPM, is a technique that Robert Kiyosaki has effectively employed to fund his business ventures and investments. This approach involves harnessing the financial resources of third parties to fuel investment opportunities, as opposed to depending exclusively on one's personal capital. The philosophy of using other people's money is centered on leveraging external capital to amplify potential returns and accelerate growth. It allows investors to control larger assets and diversify risk across multiple parties, reducing personal exposure. This approach encourages innovative financing methods beyond traditional loans, potentially leading to infinite percentage returns on investment since the investor's personal capital outlay can be zero. Other people's money is a strategic tool for rapid portfolio expansion, enabling simultaneous investments in multiple ventures that might be unfeasible with limited personal funds. Let's dive into some mechanism to raise capital. The mechanics of utilizing other people's money, OPM, for investments, pivot on several key strategies, each with its unique approach to leveraging external capital. Debt financing is a primary method, where an investor secures loans or mortgages to fund an investment. This strategy banks on the premise that the investment will not only generate sufficient returns to service the debt, but also produce a profit margin. It's a play on the cost of capital versus the return on investment, where the investor aims to have the latter exceed the former, thus netting a positive income stream or capital gain. Another method is equity financing. Equity financing takes a different route by inviting investors to buy shares in a company or investment vehicle. Here, the capital is raised by offering a slice of ownership and consequently a claim to future profits. This method is often seen in startup funding rounds or real estate investment trusts, REITs, where the capital inflow from shareholders is used to propel the business or investment forward. The investors, in turn, are entitled to dividends or a portion of the earnings proportional to their stake. Partnerships represent a more collaborative approach to other people's money, where individuals or entities combine their strengths for mutual benefit. One partner may bring the necessary capital to the table, while the other offers the expertise, labor, or management skills required to make the investment successful. This symbiotic relationship allows for a division of labor and risk, ideally leading to a shared reward that reflects each party's contribution. Syndication is a sophisticated form of partnership that involves assembling a consortium of investors to pool their financial resources. This collective approach enables the group to engage in larger-scale investments, such as commercial real estate projects or large-scale business ventures, that would be beyond their reach individually. Each investor contributes a portion of the required capital and shares in the returns proportionate to their investment. Syndication is particularly popular in real estate, where the high capital requirements can often be a barrier to entry for solo investors. Each of these other people money strategies requires careful planning, a clear understanding of the legal and financial implications, and a transparent relationship with all parties involved. The common thread is the use of external funding to achieve greater financial leverage, diversify investment risks, and potentially enhance returns. However, they also share the inherent risk that comes with leverage. While the potential for higher returns is amplified, so too is the potential for loss, especially if the investment underperforms or fails. Successfully raising other people's money for investment purposes is a multifaceted endeavor that requires both in-depth knowledge and strategic execution. It begins with acquiring a thorough understanding of the investment landscape and crafting a detailed plan for how to effectively allocate and manage external capital. This expertise forms the bedrock upon which trust with potential investors is built. To establish credibility in the eyes of these investors, it's crucial to have a proven track record. Whether it's through smaller successful projects or a portfolio of investments, showing a history of prudent management and positive returns can significantly bolster your case. With this foundation, the next step is to develop a compelling value proposition that clearly communicates the potential benefits, balanced with an honest assessment of the risks and how you plan to mitigate them. Networking plays a pivotal role in connecting with potential investors. Building a strong professional network through industry events and financial circles can lead to fruitful partnerships. When the time comes to present your investment opportunity, professionalism is key. A well-crafted business plan or presentation that outlines the investment details, expected returns, and exit strategies is essential. This should be complemented by a legal framework that ensures compliance with investment regulations and protects all parties involved. Providing assurances to investors is also important. This can be achieved by offering collateral or investing your own funds alongside theirs, which demonstrates confidence in the investment. Negotiating terms that are attractive yet fair to all parties is a delicate but necessary process, ensuring that the investment is mutually beneficial. Once the investment is secured, maintaining transparent and open communication with investors is critical. Regular updates on the investment's progress, financial performance, and any market changes that may affect the investment are all part of good stewardship. Above all, the ability to deliver on the promises made, achieving the projected returns, and managing the investment wisely is what will define your success in using OPM. This not only solidifies the current investment relationship, but also builds a reputation that can facilitate future investment endeavors. In today's interconnected world, the avenues for raising other people's money, OPM, have expanded beyond traditional networking, partnerships, and financial institutions. Here are some modern methods. Crowdfunding. Platforms like Kickstarter, Indiegogo, and GoFundMe have revolutionized fundraising by allowing individuals and companies to raise small amounts of money from a large number of people over the internet. This method is particularly popular for startups, creative projects, and social causes. Peer-to-peer, P2P. Lending. Websites like Lending Club and Prosper enable individuals to obtain loans directly from other individuals, cutting out the financial institution as the middleman. This can be a more accessible form of financing for personal loans, small business loans, and debt consolidation. Online investment platforms. Platforms such as AngelList, SeedInvest, and CrowdCube cater to startups and small businesses looking to raise capital from angel investors and the public. These platforms often facilitate equity crowdfunding, where investors receive a stake in the business. Let's explore additional methods of raising capital that individuals should take into account. Social media campaigns. Leveraging social media for fundraising can be highly effective. By creating compelling content and using the power of networks, individuals and businesses can attract potential investors or donors to their cause. Real estate crowdfunding. For those interested in property investment, platforms like Fundrise and Realty Mogul allow investors to pool their money to invest in larger real estate projects that were previously accessible only to institutional investors or those with significant capital. Syndicates and investment groups. Investment syndicates, often found on platforms like AngelList, allow individual investors to co-invest with experienced lead investors who manage the investment. This can be an attractive option for new investors looking to invest in startups or other ventures. Venture capital and accelerator programs. Startups with high growth potential can seek investment from venture capital firms or apply to accelerator programs, which often provide funding in exchange for equity and mentorship. Microfinance Institutions. These organizations provide small loans to entrepreneurs in developing countries who do not have access to traditional banking services. Kiva is a well-known platform that facilitates microloans across the globe. Government grants and loans. In many regions, governments offer grants, loans, and financial assistance programs to support small businesses and startups, especially in innovative or high-tech sectors. Corporate investment. Large corporations sometimes invest in smaller companies, particularly startups that offer innovative technology or services that align with the corporation's strategic interests. Investing without personal financial outlay is not a mere illusion, but a tangible reality for those with an open mind and a willingness to embrace their projects wholeheartedly. The key lies in creative financing and leveraging the resources available, demonstrating that a lack of funds need not be a barrier to entry. By being resourceful and strategically utilizing other people's money, individuals can unlock investment opportunities that might otherwise seem out of reach. Thank you for watching. Please don't forget to subscribe and turn the notification bell to stay updated with our content. Have a wonderful time. I will see you in the next video.